makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Trump administration has been given 10 days to lift almost all of its global tariffs after a U.S. trade court deemed them illegal. Now, 3 judges ruled unanimously that Donald Trump had misused emergency laws just to justify the levies. Now, the Justice Department has already filed a notice of appeal. U.S. futures, already buoyed by these solid earnings from NVIDIA overnight, have soared on the ruling. So let's do a lot to digest this morning's news. Joining us now, Bloomberg's senior editor Bill Ferries in Singapore. With me in London, Matt Bloxham, senior analyst at Bloomberg Intelligence. And then to put it all together from a market perspective, we're lucky to have Virginie Maisonneuve, Global Chief Investment Officer, Equity at Allianz Global Investors. So thank you all for being here. Let's start with NVIDIA easing concerns about a slowdown in China as it delivered an upbeat sales forecast for the second quarter. Now, the chief executive, Jensen Huang, told Bloomberg that the AI computing market is poised for exponential growth.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Okay, so I want to get back to NVIDIA in a second, but maybe let's just start off with this huge news about the tariffs and the courts. Bill is joining us now. Bill, when you look at this, first of all, for me, it came as a surprise. I didn't know that there was actually a trade court that could do it. I'm not sure how long this lasts, whether it goes to the Supreme Court. Like, what do we actually know about this ruling?
Well, I don't know that we can answer all of those questions, but the trade court is there to deal with these kinds of specialized questions that come before the legal system. So in this case, the court has ruled that these tariffs that really were linked by the president to national security threats like the trafficking in fentanyl, to what he said to the U.S. trade deficit. These things that he used to declare national security threats, they have been ruled invalid. The court basically said trade deficits and fentanyl may be a problem, but they're not a problem you can fix by declaring a national emergency and setting these across-the-board tariffs. So we're talking about that 10% floor of tariffs that are all under negotiation right now. That has been ruled illegal. And anything related to fentanyl against China, Mexico, and Canada, that is off the books. There still are some tariffs in place, a lot of the ones that date back to the 2018 decision by Trump to impose some tariffs. But it is potentially a big body blow for the Trump administration. We'll have to see how this appeal works out. It could go all the way up to the Supreme Court. But if the courts rule that Trump can't use this mechanism to impose tariffs abroad, he's probably going to look for other ways to do so, other paths of legislation. We know he doesn't take defeats lightly, so I think he's going to go forward. What it really means for investors, for consumers in the U.S., for foreign countries, is that there's going to be a lot of volatile days ahead as this works its way through the court system.
But, Bill, again, this is basically a legal point, right? It's not a value judgment on whether the tariffs, make sense for the U.S. So how likely that this, court ruling gets overturned? Is it a question of timeline that we don't know, or is it a question that actually, they just have to find a new legal argument?
Well, I don't think this vehicle is going to, this idea that fentanyl trafficking or that trade deficits are a national security threat, I don't think that's going to fly. That's what the courts, the appeals court, and then the Supreme Court will likely have to decide. But what I think the broader point is Donald Trump loves tariffs. He said it's a beautiful word. It's his favorite word. He's going to try to find a way to impose tariffs, whether it's through a national emergency declaration or some other piece of legislation. But it just adds a lot of fuel to the uncertainty over U.S. trade policy in the weeks and months ahead.
Yeah, we also know that, of course, Elon Musk has left Donald Trump as an advisor. We'll get to that in a second. But Virginie, before we get to NVIDIA, again, if you try and make sense of all of this, his trade strategy for the president is basically upended. Again, we don't know what the ruling means. It could eliminate some tariffs from China, Canada, and Mexico. Like, what's the market going to price in, given all of this uncertainty?
So on one hand, you have some guardrails that are popping up, which is very good. On the other end, you know that he will not let go. And my understanding, and I'm not a lawyer, is that there's several other rules that he can use. Article 122 that gives him the option to contest that, go up to 15%, tariffs for 150 days. Then that would need, that ends, that we need to go to Congress. There's another area, Article 338, which I believe gives him for unfair practices against the U.S. the ability to go up to 50% tariffs. I think we have to expect that he's going to try to do this. But what is really important here is this grassroots movement that we've been waiting for a while, in terms of putting a little bit more rationality around those practices. So on the other end, it's more uncertainty. And the markets will take that into account. We will have short-term reactions, as you've said. Countries who were more targeted will have more of a rebound. But I think ultimately we have to step back and observe and let the system work it out, right?
I mean, I feel like for the last 4 months, we've been talking about nothing else than tech and tariffs, right? And it's all in one. And Matt, there was a lot riding on those NVIDIA earnings, and actually they came through.
Yeah, they did. Yeah, I think sigh of relief for investors with the print and the upbeat commentary from the CEO. We heard on that short kind of clip earlier that he talked about demand for inferencing. So essentially, more companies and more people using AI technology more and more every day, and that's only going to grow. And it shows you that despite the concerns about economic headwinds from the trades, that this is a structural growth story still, and that companies, even if they're having to cut their overall tech budgets, what they're spending is increasingly going on AI, and I think that's going to continue.
Do they, there's also, of course, this U.S. chip curbs on China.
Yeah.
Does this ease some of the concern about some of the tensions and NVIDIA's access to that market?
I'm not sure if it eases concern, but at least it's kind of more out in the open now. I think the interesting thing about that update was they spoke about an 8 billion headwind in Q2 from not being able to sell chips into China. The market was looking for about 5 billion. And so despite that bigger headwind, the guide for revenue in Q2 of about 45 billion was in line with market estimates. So essentially there was an implicit beat there on the underlying business. I think the reality is China is closed for the foreseeable future to NVIDIA, probably could be forever. And Huawei is making great strides. And I think the challenge for NVIDIA is remaining the number one player outside of China, because clearly Huawei is going to be looking to grow its international presence.
Virginie, when you look at tech, how much is tech and, for example, NVIDIA earnings, how much is that supporting markets?
Well, it's very important. There's a short-term, the long-term. The concept of digital Darwinism is at full play here. Okay, it's particularly if you take a context of higher costs via tariffs, you need to invest even more in AI to try to lower your costs, increase your productivity, right? So the trend is intact. What's really interesting to me is how with the Middle East, now we have even more CapEx coming up, right? So we were at 300 billion, maybe it's 400 billion.
Exactly.
It's a big number. And if you look at the U.S. market, we know there's been a sort of reallocation away from the U.S. market. But if you look at free cash flow, if you look at market cap, the sensitivity to AI is very large for the U.S. and that will continue. So I think to me it's all about the long-term trend has been very clear for years, but it's all about your price point, where you put the stocks in your portfolio, what valuation, and you take advantage of moments of panics, right? But I'm very encouraged by the NVIDIA results.
Yeah, and coming back on what you said about the Middle East, Jensen Huang mentioned that he's going to do a tour of Europe in the coming weeks, and so that whole sovereign AI theme has still got to play out. So we've probably got some more big ticket contracts coming in the next couple of weeks from NVIDIA.
Matt, what do you make, and then I want to go back to actually Elon Musk, but what do you make of, Jensen Huang's comments on, Chinese rivals? So he was saying that Huawei and DeepSeek are now formidable competitors.
Yeah, exactly. I think this has been the kind of debate for a few months now, isn't it? How far behind is China in the AI race? And I think the reality is they're not behind at all. Maybe they're kind of almost on parity with NVIDIA's technology. And Jensen mentioned yesterday that Huawei's chip technology is equivalent to the H200, which is the predecessor access to Blackwell, so almost at the kind of cutting edge, and it won't take them long to kind of fully catch up. So almost these constraints that China operates under have stimulated kind of innovation, and that's kind of where DeepSeek came from too. So these are very serious threats, and I say clearly America is never going to buy Chinese technology. Clearly they're going to continue to influence their partners in Europe not to buy Chinese technology. You'll see the Middle East, Africa, Asia ex-China are the battlegrounds where that fight will play out. And we've seen it before in mobile technology, and Huawei has a big share of the global market, and mainly from those territories that are neutral to China and the US.
Bill, what do we know about U.S.-China right now? So we there's a bunch of things on education. We know that it's going to be also much more difficult for any Chinese students to actually come to the U.S. for education. But do we know a little bit more about what the Trump administration wants to do? There was a bit of a reach out.
Yeah, there was. And I mean, it was only a few weeks ago that Scott Bessent and his Chinese counterpart were in Geneva trying to, lower the tariff rate. They got that knocked down quite a bit. And there were a lot of expectations that that would be the start of at least a more productive relationship. The latest news about canceling interviews for foreign students who want to work in the U.S. and really reeling in, canceling some of those visas that were going to Chinese students looks like a step backwards. We're expecting the defense minister of China and the defense secretary of the United States to be meeting in Singapore this weekend. The Chinese minister is not coming, so that's not happening. There are, it almost seems like for every 2 steps forward, there's been 2.5 steps backward. I think we'll have to see how this plays out on the tariff front to see if that really affects the relationship. But it's a chaotic, volatile relationship, along with a lot of other aspects of U.S. policy at this point, and I think that's going to be the case for quite a while.
Volatile relationship, of course, I think of Elon Musk. So he said he's no longer a formal advisor to Donald Trump. I mean, this raises a lot of questions of what happens to Department of Government Efficiency, DOGE, and those efforts, Bill.
Yeah, I mean, there was always this weird balance about whether he was officially the head, but he clearly was the head of DOGE. Stepping away, it's clear that that effort has not made nearly as many cuts into federal spending as was promised at first. We heard about numbers like $1 trillion at one point. I think DOGE has scaled that back to $150 billion, and there's some real big asterisks next to most of those claims. Donald Trump is facing challenges on a lot of fronts, not just this tariff decision, but also the firing of government workers, the end of birthright citizenship. He is starting to be on the defensive much more than he was in the first couple months of his administration. And these issues, these challenges seem to be cropping up with increasing frequency as we go into his presidency.
And I guess, Virginie, I mean, if you tie it all together and you have wonderful, perspective, basically saying that, that because of this shifting world order, there's going to be imbalances and it's going to be tricky, actually, to get to certainly where the Trump administration wants to be. Yeah. How does this play out on the markets in terms of inflation, growth, but everything in between?
Yeah, so I think we're moving really from an efficiency-driven world, post-Second World War, managed by trust, also relationship, to this resilience-driven world, security, digital Darwinism, technology becomes really national security. So I think this world is being redesigned, probably being accelerated by what Trump wants to do at the tariff level, creating more regionalization. So, it's fragmentation in the global village unfolding. We will see some of that. Of course, probably the end picture on tariffs will not be what was discussed in the past few months, but we have to be able to live through the markets with this. So it's really granular work at the bottom up, who does what, who's part of the global supply chain, at what level, and constantly reassessing the earnings, so also currency's impact. Because as we know, in a shifting world with tariffs, one of the compensating mechanisms is currencies. We've seen that in the Trump.1 tariffs. But of course, part of it is also price pressure, putting on prices, inflation topic, and margin reductions. People will either pass on, take the cost, or the currency will help absorb it. Those 3 pillars are very important to understand earnings growth over the next few years, yeah.
Virginie, the markets, and especially the bond market, worries about fiscal spending 1 day, 2 days, and they no longer worry about it. Elon Musk was in an interview actually very abrupt with Donald Trump about the big and beautiful bill. Do you worry that there's going to be not enough bond demand, that a U.S. Treasury action goes badly? Is this the one to break it all?
Well, what we know is the 5% threshold is very important for the markets. It's important in terms of long-term financing. It's important for attractiveness. And if, with the third downgrade of the debt, if there's a concern or if pension plan can get similar returns, and we've seen that other countries also have long-term bond yields at 5 or plus, right? Maybe suddenly there's more of a choice. Now, for local pension plans, which are very large, right, it probably won't change much. But for foreign countries putting money in, and if you think of Japan, that's a very, very interesting proposition. With the yields coming up, inflation coming up, historically Japan has taken U.S. returns, invest in America, keep your dollar, invest. That may change. And I think there is a genuine structural question around the dominance of the dollar. And I'm not saying that the dollar becomes irrelevant. That's not what I'm saying. But the dollar, along with other currencies, may become, again, in this shifting world, more balanced. So all of this put together creates a world where deficits, and of course dollar currency deficits, are very important. And yes, so unsustainable deficits are very important to watch. Where are the resources coming from?
Virginie, thank you so much. And thank you also to Bill Ferries and Matt Bloxham, looking at, of course, tariffs, looking at NVIDIA, and putting it all together on the markets. Virginie Maisonneuve, who stays with us. Coming up, plenty more on Trump, tariffs, and so-called taco trade. That's next, and this is Bloomberg.
Have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
6 months ago, this country was stone cold dead. We had a dead country. We had a country people didn't think it was going to survive, and you ask a nasty question like that. It's called negotiation.
Well, President Trump, they're responding to suggestions that Wall Street believe he's unwilling to follow through on extreme tariff threats. Still with us, Virginie Maisonneuve from Allianz Global Investors, and also joined by Brendan Murray, our global trade czar. It's quite a crown that Brendan wears. Brendan, I mean, we call it basically the taco trade because it's the idea that, Trump always chickens out, that he talks tough, but then won't go through some of the big tariffs. I mean, is that the sense you're getting from the Trump administration?
Yeah, exactly. We've seen it. It's become a pattern now. We saw the big tariffs on China, the 145%. The markets didn't like it. He rolled those back. Did a 90-day extension with China. We saw it in a much shorter time span with the EU. He threatened the 50%. By Sunday, it was another reprieve for the EU after markets had expressed their disapproval. So, yeah, it seems that the market has figured this out, and that the president, as he just said, this is my negotiating strategy. You come in with a really high tariff, and then you wind up with something lower, and you declare victory. Everybody's figured this out by now, and that matters because the countries on the other side of the negotiating table, not just markets have figured it out, they have figured this out too. And the waiting game is the game that a lot of them are playing now because the economic pain long past the market's reaction starts to settle in on a much slower pace. So that's what we're seeing. The countries kind of foot dragging and drawing these talks out, and of course we now have this court ruling that's going to create a whole new cloud of uncertainty.
Virginie, I mean, this is uncertainty in the next couple of weeks because we actually don't know how Trump reacts to this ruling on the fact that some of his tariffs are deemed illegal. I mean, is there a danger? You say basically there's a danger that he goes after sectors.
Yes, I think if, in fact, we know he's not going to stop here, right? He's going to try to appeal. He's going to try to do something. And the court ruling is talking about how reciprocal tariffs in this state of emergency powers, if you want, is illegal. But the sector tariffs that he's imposed on steel, etc., was not named. So I think he'll probably try to go immediately maybe towards pharma and autos and other sector to try to compensate, because it's a question of pride. And I think what was really interesting in what you said, Brian, is that there's a time clock. In the US, companies are quite paralyzed. I mean, except if you're investing in AI, you got a long-term program. But the M&A, people are all expecting. In my view, there's probably a couple of months during which, if we continue and past that, the chances of a recession are much higher. And of course, he doesn't want that. So he's trying a lot of different things. But the strategy creates a lot of havoc. And certainly may not be an optimal diplomatic strategy. It might be a good deal strategy, but not diplomatic strategy.
It certainly keeps everyone on their toes. Let's also talk a little bit more about Elon Musk's departure from Washington, because I think that's quite significant as well. It comes as his sprawling business empire stands in flux on multiple fronts. Well, Charlie Wells is here to talk us through the challenges ahead. So, Charlie, looking from Trump's inauguration to now, what state are Musk's businesses in?
Francine, so this is a situation where a share price really tells a story. And if we look at that Tesla share price over the past year, you can see that going into Trump's inauguration, there was so much optimism around that vehicle company about the proximity that Musk had to Trump, but also the potential of maybe Tesla to broaden out sales, maybe a sort of magnification there. You had a lot of optimism about X and also about SpaceX going into this year. But when you get to this point in the year, you've seen that narrative change quite significantly. You saw a significant decline in Tesla on the back of slumping Tesla sales across the board, but also here in Europe with BYD surpassing Tesla for the first time ever. And a number of business troubles across those business lines. SpaceX, of course, having trouble with that launch just yesterday, and an outage at X over the weekend. So a business empire that finds itself facing a number of troubles.
So where does Musk go from here, Charlie?
Francine, I think we're going to see a number of changes on the messaging from Musk as he leaves D.C. We've already seen him talk a lot about the nuts and bolts, going back to some of his sort of familiar antics. He pushed a social media message out about sleeping on factory floors, on server room floors. So really trying to demonstrate that he's focusing on these businesses. He's talked about specific goals about X money, trying to make X that sort of super everything app, about goals for SpaceX, and also needing to focus on Tesla. So these are the sort of messaging that we should expect in the days and weeks ahead.
Charlie, thank you so much. Charlie Wells there with the very latest, of course, on Tesla and some of the things that Musk was doing. Now, thank you as well to Brendan Murray and Virginie Maisonneuve from Allianz Global Investors. Coming up, we talk a little bit more about this widening and declining dollar and the wider economic outlook with Jim O'Neill, the former chairman of Goldman Sachs Asset Management. We also talk about dollar dynamics. And, of course, the big story today is what we heard from Donald Trump, Trump's trade strategy really upended by this court that's blocking some of the global tariffs. Now, the ruling could eliminate new tariffs on imports from China, Canada, Mexico, and other countries, which could improve prospects for the world's major economies, reduce uncertainty caused by trade wars. But it seems that the uncertainty for the next couple of weeks is here to stay. This is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump's tariff strategy is thrown into turmoil as a court blocks many of the import taxes he's threatened and imposed on other countries. Stocks rally, the dollar gains as the ruling easing concerns about the U.S. economic outlook. Plus, the chip giant NVIDIA jumps pre-market on upbeat sales forecast. The chief executive tells Bloomberg the competition from China is now quite formidable. Now, Beijing says it has lodged complaints with the U.S. after the Trump administration says it would begin revoking visas of Chinese students. Now, the move announced earlier by the Secretary of State, Marco Rubio, includes revoking visas of those with connections to the Chinese government or studying in critical fields. Bloomberg's Jill Dices now joins us from Hong Kong. Jill, what could actually be the potential impact of the visa ban?
Yeah, I mean, I think, Francine, this is pretty significant here, right? You've got Rubio saying that they want to review these visas for connections to the Chinese Communist Party. I mean, realistically, China's a communist country. It's a single party state. There's 100 million members of the Chinese Communist Party. I mean, I think that kind of rationale is fairly vague and could conceivably be used to justify revoking student visas for any number of students. And I think that when you're looking at the number of Chinese students that the U.S. takes in, I mean, it's really second only to India in terms of countries that do send students to the United States for study in that fashion. So you are looking at something pretty significant here, depending on how exactly the U.S. Implements this. I mean, we know that more broadly, it seems that the Trump administration is taking a closer look at student visas worldwide, all of this being part of national security concerns, particularly when it comes to China. But I think from, sort of that practical level, this could be pretty significant. And then I think it also obviously does have some implications for the broader U.S.-China relationship, really kind of once again, sort of a ratcheting up of tensions there.
So, Jill, how much will this rock the relationship between Washington and Beijing?
So at this point, I think, again, it really kind of speaks to that idea of escalating tensions. In terms of, whether China is in position for a tit-for-tat move, I'm not sure what we may see there. I think, really worth noting that there are far less American students who study abroad in China than there are Chinese ones that study abroad in the United States. So maybe you're not looking at a one-to-one tit-for-tat move there. But I think when you take this in context of the entirety of the rest of the relationship, a lot of restrictions back and forth on each other, covering everything from advanced technologies to rare earths to simply just, what's happening with tariffs right now. I mean, obviously, we have a bit of this temporary reprieve, against each other on the big escalation of tariffs we just saw just a few weeks ago. But, that does have an end date that is due to expire at some point because it was supposed to be setting the pathway for negotiations for some sort of a broader tariff deal. I think, several, questions there about whether something like this move on the student visas ultimately does impact other elements of the relationship, including some of those trade negotiations that are happening.
Jill, thank you so much. Jill Deesis there in Hong Kong with the very latest, of course, on U.S.-China. Now, a gauge of the dollar has climbed to its highest in a week. That's as investors react to news that the vast majority of President Trump's global tariffs have been deemed illegal by the U.S. Trade Court. Now, it follows a recent retreat from the dollar on the so-called Sell America trade as Trump's policies rattle investors. Now, to talk more about this, we're joined by Jim O'Neill, former Goldman Sachs Asset Management chairman, former UK government minister and current member of the House of Lords. So, Lord O'Neill, thank you so much for joining us. You wrote a couple of opinion pieces in the last year saying, look, it's not especially healthy for the world to be so dependent on the dollar. Will the world be fundamentally less dependent on the dollar given the last 4 months?
Wow, what a weird day to have to answer questions like this. I mean, who knows what's going to happen in the next week on this stuff. I think one needs a sort of three-dimensional version of game theory to kind of just follow through what now might happen. But when I sort of stand back from it, I think that the core thrust of where the Trump administration is trying to go, and as an aside, I suspect the more sober, rational people in it, like Scott Bessent, probably won't be overly displeased with this ruling, given that they're essentially against tariffs. I think you've got to figure out what is the probability that they just back off on aggressive trade measures as a concept, or they seek alternatives that are either going to get through the courts, but most importantly, as it relates to the very question you asked me about the dollar, do they revert to a more conventional, let's call it, version of the 1980s and the Plaza Accord? And many of your viewers or listeners are probably not around in those days, but the Plaza Accord to deliberately weaken the dollar was done to avoid Congress imposing protectionist tariffs against the rest of the world, particularly Japan in those days. So I don't think this is the end of many of those questions. And the other thing that I've written about in many of those pieces, including the one recently, is it's not just the tariff issue that threatens aspects of the importance of the dollar and the rest of the world's dependence on the US consumer. But the whole issue of how it's taking on other bastions of, the not only establishing America, but also the things that have probably made the US so exceptional, such as Harvard University. And those things don't. I've just listened to the back end of your conversation about the visa issue with China. If the US is truly trying to stop foreign students from all over the world of going to US universities, I would argue that that is something also that is indirectly pretty bad for the long-term outlook. It's not relevant to tomorrow, but it's pretty bad for US productivity and pretty bad, therefore, to the fair value of the dollar over the longer term. On the issue of what the rest of the world... Yeah, sorry, go on, Fran.
Now, if you look at global trade, right, overall, I mean, if we're going through a fundamental redesign of global trade, and I don't know whether you think that's exactly what the Trump administration wants and whether they'll succeed, but given the interdependency of trade, if they want to redesign it, I mean, it's going to be chaos over the next 5-6 months, no matter what happens.
I guess what I was trying to say, a more rational approach, and this might be the sensible thing for other countries to still do, is to try and just, through verbal and coercion of other means non-tariff, to persuade countries that really matter, like the EU, like China, to pursue more expansive domestic demand policies that would suck in more imports from the rest of the world, including the US, and or voluntarily choose to import some specific things more from the United States. And I don't think that's a crazy thing for the US to encourage. Throughout the whole of my 4 decades of looking at all this stuff, it's like a reoccurring theme every other decade that the US has had enough of being the main consumer for the rest of the world. And I think they have got a point on that. I've not understood for the whole life of the existence of the Eurozone why its biggest member, Germany, never has any domestic demand growth. And of course, we're seeing a change on that. So I think that will stick. Whether the EU will actually continue to think, well, now we can get away with what we didn't really want to do, or in fact still think, well, you know what, we should import more stuff from the US just to keep not only the people around this president and future presidents more content, so we don't have to go through it all again, is amongst the intrigue that we'll now face. But the idea, it's very interesting to see the markets reacting, I suppose not surprising the way they've done this morning, but the idea that this means many of the issues about the dollar the past 3-4 months are now over, I think is very questionable.
You coined the term brick over 2 decades ago. Do we need to look at the world radically different now? So it's not, developing countries, developed countries. It's everything's much more in flux. If you had to redefine the global world order, what would it actually look like, Jim?
Wow. I mean, we could spend the whole of the rest of the week having that discussion.
It's TV. We have 20 seconds.
Yeah. I think what we really need in the near term, it seems like impossible, but we need a resurrection of the G20, which is, so far this millennium, the only thing that has brought the BRICS countries and the G7 and other big developing and developed countries together in one forum. And after the financial crisis, it did a pretty good job for 2 or 3 years, despite all the differences of coordinating the world in a healthier way. And we desperately need that again. What we probably do need over time is a restructuring and a reordering of all these post-Second World War institutions that aren't doing the job they were supposed to do. And again, despite me finding the way this administration is trying to deal with them pretty horrific, they do have a point on some of these issues.
Where do you see, Jim, the biggest value in markets? So again, we're trying to figure out the immediacy of the court ruling today. But if the dollar, weakens, do we see China as a big winner? Can Europe take that role?
So I all the way back since this is a dangerous question because I'm feeling a little bit cocky. I know more than many that it's pretty easy to get these things wrong quite often, but. I came to, as soon as I saw the Bundesbank in November saying that the German government should abandon its debt ceiling rule, I thought this is a big moment, and maybe we're on the verge of a multi-year performance of European stocks outperforming the States. And that's kind of what's happened, of course, so far this year. And I would stick to that. I think at a minimum, this chaos from Trump has woken up the EU to deal with things it should have dealt with for its own benefit many, many, many years ago, if not decades. And I think some of these things are not only here to stay, but some of them, such as genuine cross-border services sector reform in Europe, are likely to accelerate. And I think the markets have cottoned onto that, and they're right to. So I think that the general relative performance of equity markets that we've seen so far in this very volatile year is actually going to be a theme for a few years. And so that'll be probably my strongest hunch. Yeah. On the dollar itself, you know, the markets seem to be so quick to price in everything. I can see why the dollar would stabilise and recover a bit from this, if this is the new status quo and the tariffs won't be so big. However, I can't see anything other than over the year a further weakening of the dollar, because the dollar is significantly overvalued, and I think the equity flows that have driven it are not going to be there compared to the ones that are likely to be attracted to other markets.
Yeah. Do you think the market is too pessimistic? Jim, we were talking before about the fact, you know, there's the taco trade, which I did not coin that, but it's an acronym for, you know, Trump always chickens out because he talks tough, but then it doesn't want to follow through on the tariffs to the extent that to which he says he would. So is the market just generally optimistic whilst ignoring all of the deficit concerns in the U.S.?
Well, we haven't even touched on that yet. I mean, you know, when I look at some of the aspects of this tax bill that's going through Congress, which is probably going to pass, on top of where the US budget deficit is in the first place, I mean, quite how that is going to end positively, I have no idea. And that means that the US fiscal position is probably on some medium to long-term collision course with the bond market. And so, and you know, markets are pretty good to think about big things that are coming. So at some point, which is very unpredictably when, you know, there's going to be a whole set of financial trauma issues related to that, in my view. In the day, you know, some people think that this is a modern version of Reaganomics and it's essentially going to help really boost US trend growth and therefore be really good for the dollar. I find that very hard to see, because the nature of this fiscal deficit has so much in it because of just an inability of the US to reduce spending on things that really matter, such as the colossal bill they have on health, just one example. I think it's not particularly good for US growth. And so I think at some point that is going to result in the same scale of intense focus that we've seen on the tariff issue for the past few months, even if the tariff issue goes away.
Okay, so interesting. Jim, we haven't even talked about football, so we'll have to get you back on. Jim O'Neill,
oh my
former
God.
chair.
That's
I don't know if you want to talk about football.
That's a topic I don't want to talk about for the foreseeable future.
I know. That's why we'll get you back on. Former chairman of Goldman Sachs Asset Management and a member of the UK House of Lords. Now, President Trump says he's holding off on new sanctions against Russia in order to preserve the chance for a deal with Vladimir Putin to end the war in Ukraine. Earlier, Germany's top diplomat said he's optimistic that Washington will issue new sanctions against Moscow if Putin continues to dodge a peace agreement. Now, for more, we're joined by Greg Sullivan, a Russia economy and government editor. So, Greg, thank you for joining us. How serious is Trump's threat to impose new sanctions on Russia?
Well, right now we're hearing from the U.S. president that he wants to wait on new sanctions to give the peace process a chance to come to a final deal between him and Putin. We have seen that he has been making new and more frequent threats to impose new sanctions on Russia, especially in the wake of some of the heaviest bombardments from missiles and drones that Russia has sent against Ukraine since the start of the war. Clearly, there is a level of rising frustration on the part of the president, but until now, he's been very reluctant to impose any kind of punitive measures, worrying that they will disrupt the peace talks or disengage his attempts at rapprochement with Moscow. Clearly, he's favored bettering relations with the prospect of future economic cooperation with Moscow over any kind of punitive measures to try to force President Putin to the negotiating table. Now, talks so far have produced very little. They've been going very slowly. It appears that President Putin does not want to end his war. He's seeking more military gain on the battlefield. So if that continues, that could frustrate President Trump and potentially change his tune. He is under an awful lot of pressure from senators, some in his own party, to impose sanctions. So that is a dynamic to watch there.
Greg, President Zelensky also held talks with the German Chancellor yesterday. So what has concretely come out of that meeting?
Well, there's a few things here. One is that Germany agreed to new aid for Ukraine and will help it develop a domestic industry to manufacture its own weapons. Ukraine has been seeking the use of long-range weapons to strike inside of Russia as it seeks to degrade Moscow's ability to attack Ukraine. It wants to target airfields, missiles, weapons storage, things of that nature. So far, Germany had been reluctant, especially to supply the long-range Taurus missiles. But now we have Germany agreeing with Zelensky to help develop the Ukrainians' own industry. Now, the dynamic here is interesting because obviously U.S. support, there are key questions around whether that will continue and in what ways. We've seen support waning from the U.S., so this will help Ukraine turn to a more self-reliant stance as it continues to fight its war against Russia.
Greg, thank you so much. Greg Sullivan there with the very latest on Ukraine and Russia. Now, coming up, we'll discuss the outlook for oil as OPEC Plus ratifies its quota plans for this year and for 2026. That's next, and this is Bloomberg. Now, the chief executive of Aramco says he's positive about the future despite the impact of Donald Trump's trade war. Well, Amin Nasser has been speaking exclusively to Jumana Barsechi for Wall Street Week.
The fundamental is still strong. If you look at the first quarter, the growth compared to the first quarter of 2024 is 1.7 million barrels per day, which is a strong growth that we have seen. The tariffs had some impact in global economy and sentiment, but still the fundamentals are strong, and we think that will continue for the foreseeable future.
Well, you can see more of our interview with Amin Nasser in Wall Street Week special on Aramco, airing next month on Bloomberg TV. Now, OPEC Plus has ratified oil production quotas for this year and next, ahead of their meeting at the weekend, where they're expected to decide whether to boost output again in July. Now, we're now joined by Amrita, founder and director of research at Energy Aspects. Amrita, as always, thank you so much for joining us. Do you think OPEC Plus will actually add another 400,000 at Saturday's meeting?
Yeah, I mean, this is the 8 voluntary countries, or 8 countries that have done the voluntary cuts, and it is likely that they do add another kind of 3x increase in production. Some of the core issues that we've been dealing with, which is kind of under-compliance when it comes to some countries like Kazakhstan, that remains. That hasn't really been resolved. And also, if you look at fundamentals in the right here, right now, they are strong. Inventories are very low. If you look at the curve, it remains in backwardation. Product markets are very strong. So it is a good time for OPEC to add barrels to the market. So I don't see why they wouldn't actually continue with the current policy.
What do you make, of course, of Kazakhstan's public refusal to cut? What does that mean?
It's a tricky situation given they have all these foreign companies, and a lot of these foreign companies are U.S. companies. And we've seen certain kind of U.S. companies and their CEOs over the last year being accused of colluding with OPEC. So I think there will be a lot of cautiousness, particularly for these U.S. companies to even do anything that could seem as that, they are doing something with regards to kind of siding with OPEC. Yet, Kazakhstan remains a member of OPEC Plus, and therefore it has obligations. And I think this is an ongoing conversation that's happening between countries, between Kazakhstan, Russia, and I'm sure the other members. And yeah, I mean, one way or the other, the compensation, forget the compensation cuts, but just the compliance has to improve. Maybe you start to get more maintenance in the coming months. That's what historically they've done to meet compliance. And I think maybe over the kind of autumn months, you see a bigger than usual maintenance if they are to catch up.
Do you think Kazakhstan will leave OPEC Plus?
It's a tricky question. We do get asked that all the time. And, again, we have seen other countries kind of leave in the past. That's not our base case. I think, again, this is a period of you've had some new projects, and that's why they are struggling with compliance. I think they gain more to be a part of the group than away from the group. And I think, again, like I said, it's going to take some time. But, I mean, ultimately, there will have to be a solution to this kind of compliance problem.
Amrita, there's a lot of uncertainty, right? I mean, oil today climbing on this risk-on mood as, this trade court has blocked Trump's tariffs. We don't know what happens next week. We don't know whether he goes after sectors instead of countries, which haven't been mentioned in the court ruling. But is the market overall, you think, headed for a recovery, or is it headed for a deeper slump?
Yeah, I mean, it's a great question because, again, every day you wake up, you just don't know which way the wind is blowing, right? And I mean, the court ruling, from our understanding, takes away all the Liberation Day tariffs. However, it does not take away the sectoral tariffs. So tariffs on steel, aluminium and automobiles are still in place. I would say our view is that given how central tariffs are to Trump administration's fiscal agenda, the administration is going to find several other legislations in order to reimpose most of these tariffs over the next few weeks and months. And I think the problem is because, again, we know White House has already come out and said that they're going to appeal this, that from a company point of view, you just don't have the certainty, right? So you're not going to go ahead and make a decision to import right now. What if the tariffs do get imposed and you have to pay retroactively? So it doesn't change anything on global oil demand just yet. If the ruling holds up, then of course it's a positive for 25 GDP, 26 GDP, and for oil demand. But right now, it's too soon to make any changes because we know that tariffs are so crucial for this administration.
Amrita, and I know current stocks, are low, but you believe that stocks in oil will actually build up in the fourth quarter. Is there anything that makes you doubt that?
Yeah, I mean, I think this is the dichotomy in this market, right? It's fascinating because I think all our balances are calling for Q4 builds, in part because demand growth slows down with the impact of the tariffs. We've got more OPEC plus barrels as well in the market. And that's in everybody's balances, our balances and everybody's balances. But the problem right now is that the right here, right now is so tight. And I think that's why your question is fair, that do you actually see something underperform, whether it be supplies? I mean, U.S. shale, you are already starting to see some signs of slowing down. We are seeing more SPR buying from China again, so that's more crude demand that's coming through. Those factors can actually mean that some of those builds in Q4 are less than we are expecting. We still are confident we're going to get a build, but if inventories are so low to start with, the extent of the build will matter a lot, right? If it's less, then you don't have to have a market that's weak. You can still have a market that is stronger than what people are expecting today.
Amrita, thanks so much, as always. Amrita Sender, founder and director of research at Energy Aspects. Now, coming up in a few minutes, an interview with the PIMCO president, Christian Stracke, on the state of credit. You don't want to miss that. And then later this evening, also, our exclusive conversation with the Bank of England Governor, Andrew Bailey. Now, you can check that out on LiveGo on the Bloomberg terminal. A lot of the focus today will be on markets, on futures, and exactly what we learned and what we'll learn today on this Trump strategy. It certainly be upended after a court has blocked global tariffs. The ruling could eliminate new tariffs on imports from China, Canada, Mexico, and other countries. Up next, Bloomberg Brief, and this is Bloomberg.